Hello everyone, welcome to the ESS BIZTOOLS members webinar, where we're going to talk today about offering virtual CFO services. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Our apologies for the delay in getting started. We just had a couple of technical issues, which hopefully we've now sorted out. If you have any questions and you're watching this as a live presentation, please type your question in and send it through to me. If you're watching it at a later time, which was more convenient to you, why not send me an email with any questions, peter@essbiztools.com.au. The subject today is offering CFO services. And I want to take you through why I think this is so exciting for accountants to be involved in. So why virtual CFO services? I think it offers interesting and challenging work to keep talent at your firm. And this is one of the biggest problems confronting accountants at present, and a lot of other service industries. A few months ago, I had a webinar with Andrew Geddes, well-known Australian accounting expert. And Andrew indicated that he felt it was because we were not supplying interesting work to younger accountants, and they were not receiving sufficient mentoring and advice. I suspect they will get plenty of that if your firm's able to supply virtual chief financial officer services. So I honestly believe that this will assist your firm to attract and retain talent. It also spreads work over the full year. And we're going to talk today about the American accountant who has been described to me and a webinar audience in Australia as being the rock star of the American accounting industry because of his work in developing virtual CFO services as a mainstream product for American public accountants. And he indicated that one of the reasons he first went into all of this was trying to spread work throughout the year rather than having it all accumulate in the tax season. And we'll talk about the other reasons in a moment. Recognises that SMEs need a broader range of accounting assistance than just tax. Please think about this. If you've ever worked in a large company, you will know that there was a person there called the chief accountant or the chief financial officer, or even just called the accountant. And that person is responsible for a lot of work in that organisation other than taxation. They're looking at weekly reports. They're looking at daily debtors and bank figures. They're looking at monthly financial accounts. They're analysing things. But how do your SME clients get on? Many of them are running growing businesses. Their turnovers might be 500,000, $1 million, $2 million, $3 million, $5 million, $20 million per annum. Who's giving them the same sort of input and advice that a larger company CEO gets from the in-house person? So all that this model is trying to use today's technology and communications to enable your firm to be able to supply a virtual CFO service to your clients to help them with some of the issues that they're confronting as they just grow or they deliberately scale up in a fast manner. They need input of high quality financial advice throughout the year, not just for 1 week of the year. It's a new business model that's built around three components. This is the American model, and we've done some modifications to it to suit what we believe is the first-class service that you can deliver in Australia. Financial forecasting, business advisory is the key component of this whole product. Back office accounting and bookkeeping. I was surprised when Adam Hale, the rockstar accountant in America, told us that he was offering bookkeeping services as part of this overall function. In fact, he told us that 32% of their clients had elected to take on the bookkeeping services. And taxation advice. He told us that 90% of the clients that they have elected to have his firm look after their tax work. They don't see tax work as being the priority, but 90% of their clients have elected for them to do it for them. So what's in the financial forecasting or business advisory package that we envisage that you can deliver? It starts with the budgets and cash flows and projected balance sheets. There's no doubt about that, because that's the key document. I think it's the bedrock documents that everything else is then measured against. Budgets for each business unit, not putting all of the activities into one budget. You can consolidate the budgets at the end of the process if you wish, but the key thing is individual business units. So if you have a client who has a wholesale business, 3 retail shops and a workshop, break them down, 3 retails, that's 3 separate businesses, the wholesale business. So we've got 4, we've got the workshop 5, and you've probably got an office or administration segment 6. And you might have the situation where the business owns one or more of the properties that the business is operating from. So set it up as a separate profit center also, and charge rent, commercial rent, to those business activities. Because in that way, you'll get a far better appreciation of how the individual business units are performing. And when you do benchmark comparisons, you'll have all of the key data. Cash flow forecast. Obviously, it flows from the budgets and includes information from the key drivers. Key drivers are the key supporting documents to this overall process. Inventory reconciliation, opening stock, purchases, closing stock, looking at whether there's supply chain difficulties. Does supply have to be built up at in certain months of the year because of delivery, because of weather conditions, or because of fear of interruptions to supply? And there's a lot of that been going on in the last year or so, hasn't there, because of the war started by the Russians. From each of those sources, there will be transactions that are affecting the budgets and also affecting the cash flow forecast. The projected balance sheets are very important because they're going to be able to tell your clients what the financial picture is at some future date, 1, 3, 5 years' time. And incidentally, the recommendation is that these forecasts are initially prepared for 5 years and then updated every year so that your client can have an appreciation of where their business is heading. And it encourages the leadership team to think about the future. Key performance indicator analysis is very important, first of all, as part of the budgets. And it's one of the key reference points when you're preparing budgets, just to make sure that some errors haven't occurred in assumptions. If gross profit percentage traditionally has been running at 53% for your client, and the budget comes out talking about gross profit percentages of 74%, I think you might have a mistake somewhere. And that's why you need to have a look at the key performance indicators. Another key one is average sale figures. If average sale is $21.33. It's probably not going to go to $42 unless there's a real reason, a real change that's occurred. But you need to check those KPIs. So the businesses develop the budgets, cash flow forecasts, and projected balance sheets. They are the bedrock documents. I think the next part of the service that you should be providing is on a 52-week of the year basis. And one of the key functions is the weekly performance review. Now, I know a lot of SMEs do not do weekly performance, but big companies do. I was the CFO of a large company in the meat industry, retail butcher shops, small goods factories, meat works, boning rooms, freezer stores, situated in the 3 eastern states of Australia. They were all conducted as separate business units, and each week a weekly performance report built around a profit and loss account and key performance indicators was prepared for each activity, hundreds of them. And that company was broken into various divisions. There was an area manager in control of a division, and he would receive his reports on each of the activities that he had overall responsibility for each week, Monday afternoon, Tuesday morning. And then the consolidated reports ended up on my desk in head office, and I analysed them. So I was able to give a report to the CEO by 12 noon on a Wednesday. And that way the company was controlled. Now, a lot of businesses do it that way. Woolworths, Coles, IGA stores, and a lot of businesses. Why aren't your clients doing it? If they are, that's great. Congratulations. It's one of the key activities that I think if you were a CFO in that business, you would instigate. So I'd be urging you now to look at it as a virtual CFO. There's also a need for regular meetings. I found that probably half my working day was in meetings, primarily with the CEO, but sometimes a couple of the other internal directors, public company directors, but also with the sales manager, the marketing manager, the production manager, the chief engineer, looking at all sorts of things. What happens in your SME clients' businesses? Who do they talk to? Because I found that I seem to be the common denominator in most of those meetings, because I was finance. And invariably I was saying, it's not in the budget, we can't do that, or we haven't got enough money, or I'm going to have to go and try and raise some finance for that, or whatever. What do your clients do in those situations? This is the role that you can play. Monthly financial accounts for all business units. I think one of the real benefits of the virtual CFO system, it brings in this discipline of being able to say to your clients, we can now definitely produce monthly financial accounts for all of these business units that have been identified in the budget, so that you can then prepare budget for variation reports and key performance indicator variation reports. And the key meeting then is the business review meeting. There might have been one or two meetings or short discussions during the month. Most of them you would have attended to in a Zoom meeting. Doesn't mean you've got to be there in person, but the business review meeting could then be held monthly. And again, it could be a Zoom meeting. Depends where your client is, and this whole aspect is it's being delivered on a virtual basis. But the business review meeting would be a meeting I think should be coordinated by you as the virtual Chief Financial Officer. You have gone through and analysed the performance, prepared a report, submitted it to the leadership team for discussion. Now, the next meeting within the corporate setup would be a board of advice or board of directors meeting. Your report would probably be considered there. You may be asked by the CEO to participate in that meeting as well. There's back office accounting, bookkeeping functions, which, as I indicated earlier, is basically a client election. Do they want your firm to attend to this? Or this was what was identified in the American firm, and you could undertake that work if you wish. And then we got the taxation advice and the preparation of taxation returns. And I've already indicated that 10% of the American firms' clients had elected to go elsewhere. I'm told that in most cases they elected to remain with the firm that they were previously with to do their tax work, because that's all that firm wanted to do. I think they were making a major mistake, that firm, and they may have already learnt their lesson by this. But it's obviously up to you whether you wish to continue to do tax returns. So the overall product offering is described by Adam Hale, the American accountant, who gave us tremendous insight into what he does, was that his offerings were either light, and that was built around monthly meetings, only a monthly meeting with a client. Medium, they were committing themselves to have bi-monthly meetings, or heavy, which was built around weekly meetings. That's up to you to sit down and discuss that with your client. Adam Hale has identified that he wants financial forecasting to be compulsory for all clients. In fact, in the webinar that we recorded, which we're quite happy to make available to you, and we are attaching it to the members alert that we're sending out this week, he indicated that the financial forecasting was the most important task that accountants can perform for SME clients. And that's the reason they've made it compulsory. If after they've talked to a prospect, the prospect says, no, they don't want financial forecasting, they decline to act for them, because they basically indicate that is the key item. It's the bedrock that puts all this together. What do you think? Are you prepared to take that stance in talking to your clients as you go down this journey? I think there's a lot of benefits, and my recommendation is that you do likewise. I think we need to really learn what the Americans have already undertaken in this journey. So let's have a look at some of the approach that Adam Hale has identified, approach to an SME business. When an SME makes contact, a Zoom meeting is organised. His firm is a virtual firm that's run from an office in Indiana on the banks of the Mississippi River. Get the atlas, it's about in the middle of America. And they've got teams working all over America on a virtual basis. They basically do not have an office. They discuss the services that are available. And one of the comments that Hale made in the webinar that I've used a few times since is they want to get to know the client. They want to know the client situation 1 inch wide, but a mile deep. 1 inch wide, but a mile deep. Their main focus is financial forecasting, which is compulsory. That meeting lasts about 2 hours. And then if the prospect is interested at the end of that, and they've been told the overall story of how this firm delivers, a proposal is then submitted by email later that day. This communication includes the annual cost to supply the service. So not worrying about their timesheets or hourly charge out rates, they have worked out an annual cost. And there's no doubt that they're basing that on what the cost would be for that client to employ a full-time CFO, which Hale says is over $400,000 US in the American market to employ a chief financial officer, when you take into account study leave, holidays, sick leave, etc. They then calculate the weekly payments that they will indicate to the client that they require payment of each week. They calculate what they call an onboarding fee, which is calculated at twice the weekly payment that is to be paid weekly over 8 weeks. That's an onboarding payment. Hale said there's very few terminations at this stage. People have elected to come to them. But their services can be a lot higher than what a client or a prospect might be paying at present. And some of the comments that he referred to are, well, I'm going to pay 2 to 3 times what I'm used to, but I'm not getting value from my present accountants, so I will sign up with Summit Sales Company. If someone was going to pay 2 to 3 times because they could see value, you're going to have that type of conversation with clients. Each Monday, they only have one administration person, apparently, in Summit, and that person processes the payments for each of their clients, and there's 150 odd of them, utilising the automated clearinghouse system to process the weekly payments. So what's the benefit of that? Well, you've read it. There's no very low lockup compared to traditional firms in the USA and most firms in Australia, where according to benchmarking.com, our lockups in Australia are 77 to 85 days. They get rid of most of that. No debtors. Sounds great. Now let's look at this. Summit's average fees range from US $40,000 to US $200,000. Bear in mind that they're using the effective cost to employ a CFO in America by a business at $400,000. So they've set their pricing according to that. How much work do they think they're going to have to deliver compared to someone working 40 or 45 hours a week? Would be costing the firm $400,000. And the average is US $80,000. They've got 150 clients. After analysing various software packages, they've selected PlanGuru's software, which they utilise for the preparation of the 3-way financial forecast, which banks now require all over the world. So they get budgets, cash flow forecasts, and projected balance sheets. I'd invited Andrew Geddes, the well-known Australian accounting industry guru, joint founder of Financial Management Research Centre, known as FMRC, which used to be at the University of New England. And Andrew was chair for 10 years of Greencross, a company that became an ASX top 200 company during his term as the chair. A great company, ran veterinary surgery businesses and pet supply businesses all over Australia. Geddes's comment after watching the video was, it's a new business model. I think it's going to revolutionise the sector globally. And since then, we have produced a couple of accountants' minutes that have made further comments about additional comments that Andrew has made, and he has featured in 2 of our podcasts, which are all on our website, where he has talked up this process and says this is what accountancy firms should be doing. This will help you overcome your talent attraction and retention problems, he says, because it will be offering interesting and challenging work as well as taxation. Everyone knows that tax returns have still got to get done, but the work needs to be looked at closely. The work is reducing, and that was one of the key motivations in the first place that got Adam Hale at Summit to start looking at what alternatives were available. And they went and talked to some clients and said, can we come in and look at what you're doing and maybe do some work earlier in the year? And the clients welcomed them with open arms, apparently, and said, we've been hoping you would do this for years, but you've never done it. What would your clients say? So you can read the accountant's minute that we produced following the webinar presentation involving Adam Hale. It's on our website. It's Accountant's Minute Edition 324. Please go to it and have a look, and you will get a better idea of what I'm referring to. And you can read a series of follow-up articles from 324 through to 340. So 16 more articles have been written then, the majority of which are on this overall theme of accountancy firms being able to provide virtual CFO services to help your clients add value to your business. So where to from here? There's no doubt that accounting is changing, none at all. But it's been changing for the 40 years I've been around it, either in a public practice where I was the partner in charge, or within a public company environment as a chief financial officer and public company secretary, or as a consultant, partly for a major government program, and obviously as the key writer of the material within ESS BIZTOOLS. I've seen a lot of changes. And I know some people say the tax office talk doesn't always come to pass. I think it does ultimately. It might take a couple of years longer than what's said, but most of the changes, and I've seen a lot of them. And so have people like Andrew Geddes, Paul Barnaby, Mark Holton, David Smith. Talk to them if you like. There's been a lot of changes implemented over the years. And what the tax commissioner is saying will happen. Your membership of ESS BIZTOOLS has identified that your firm is aware that changes are occurring and aware that you think you need to supply some additional services to clients. Now, a subtle warning, there will be many other firms now looking at the opportunities that are available to them, especially after they heard the tax commissioner talking a few weeks ago. And I'm going to come back to that in a moment. ESS BIZTOOLS Business Advisory Services Starter Package is a great package that we've designed to suit small firms of accountants. Some of you I know are basically sole traders, right? Working on your own, maybe one or two staff. Where do you start? You may have traditionally been doing micro business work and wage earner tax returns. Now, I hate to tell you, but you're the group that's at biggest risk, I think, from what the tax commissioner is talking about. So what are you going to do? I think you should be starting to work your way up the client chain to be trying to attract some additional clients. Well, one way to do that, and I think the most important way, is to get involved in delivering business services. And our starter package will help you. We will supply you material with wording, with suggestions, with examples of videos and posts that you can use to promote your services, to communicate with your client. One of our affiliates, Brad Smart, is a very experienced journalist and writer, and he has made an offer for the development of e-newsletters for accountancy firms. You could use them to get started on communicating with your current clients, but also prospects in your general area. It might be the members of your local chamber of commerce. You probably find the chamber's quite happy for communications to go out. Run some webinars, communicate with them, let them know what you're doing. Show them that you're intent on supplying more than just taxation. Our advanced product includes a wide range of resources to help you deliver a full virtual Chief Financial Officer service, and includes access to our grant finding package, ESS BIZ Grants. It's got everything in it, and we will be adding new material throughout the year. And as a subscriber, you get access to that material. The financial forecast package, which we have, is the top of the tray, but it includes all of the advanced package material that I just referred to. Plus, it gives you access to the 3-in-1 financial forecast package produced by Plan Guru that Adam Hale has strongly endorsed, and I use it. I find it a very good package. One of the real benefits that we've been able to negotiate for our subscribers is that Plan Guru will license the software package to our subscribers for 10 business clients. Normally that's only 3. And once you want to go beyond 3 clients on the software, a subscriber has to pay an additional fee, $29 per month. I understand it is. So if you multiply that by 7, if you've got the full 10 clients, you'll realise that you've got a saving of over 3,000 Australian dollars from that arrangement. Plus, Paul Barnaby, a fellow of the Institute of Chartered Accountants and a walking encyclopedia on predictive accounting and the Plan Guru software that he selected after he looked at 10 or 12 other packages, he tells me, over the years, runs the training in how you would utilise Plan Guru software. And also Plan Guru, Paul Barnaby, through his company, Beyond Accounting Technologies and ESS BIZTOOLS, have formed an organisation, Certified Predictive Accountants, which is looking to accredit people who have gone through the full training process on the delivery of predictive accounting. That's also part of the process for one of your team. You're going to have others undertake the CPA training and mentoring if you wish, but that will be an additional fee. So that's what's in the financial forecast package. It's there and will really enable you to deliver. So I think you're able to create the strategy for a proper accounting involvement with your client. Monthly financial accounts for individual business units compared to budget, monthly key performance indicators, a monthly board and review meeting facilitated by you as the virtual chief financial officer. It's your report to the leadership team on how the individual business units have performed, where there's problems emerging in the budgets or cash flow forecasts. Maybe there's some problems up ahead. Maybe there are supply chain difficulties, which means that the build-up in stock has got to be a lot higher than normally. Instead of having 600,000 invested in stock, maybe it's now going to go to $2 million. Where's the cash going to come from for that? So that's the updated cash flow forecast. So if you want to know more about these product packages and that we are currently developing and about Plan Guru software, please contact us and we can arrange a Zoom meeting for you to ask your questions on the Plan Guru software and the Certified Predictive Accountants training and mentoring course with Paul Barnaby, fellow of the Institute of Chartered Accountants, and the Australian and New Zealand representative and Asian representative for Plan Guru. So Paul's the man to talk to about Plan Guru. And I will talk to you about any of the ESS BIZTOOLS products that you have any concerns about. So thank you very much for your support of ESS BIZTOOLS and ESS BizGrants. If you have any questions, and I can't see that any questions have come through at this stage, if you have any questions when you watch this webinar recording, please send me an email, peter@essbiztools.com.au, or send me or make a phone call to me, 1-800-232-088, and I will get back to you. Stay safe. Have a great day. Goodbye. And I hope that this whole exercise has given you something interesting to think about. Goodbye.